Hello. Well, it's been a tale of two halves this week, with prices easing early on before rising throughout the end of the week. So let's have a look at those movements in some more detail. Oil started the week in bearish territory as a strong US dollar lent on prices. However, the downward movement was short-lived. Prices rose on Tuesday as API data fueled expectations that US inventory would decline this week. The expectations were correct, and the release of the weekly EIA report showed that US crude inventories decreased by 4.2 million barrels compared to the previous week. The bullish report gave direction to prices, and Brent climbed throughout Wednesday and Thursday's session. As a result of the inventory data, and also a reduction in oil supply to the tune of around 4 million barrels per day this month, Brent traded at over $50 per barrel on Thursday. This is the first time in 7 months that the contract has breached that level. Prices eased slightly towards the close of the session, but front-month Brent still closed the session higher and closed at $49.85 per barrel, which was at $1.28 per barrel compared to last Friday. Gas prices eased on Monday thanks to healthy supplies through Jutton Seal and also LNG send-outs. Falling oil prices pressured longer-dated contracts lower. Prices continued to fall on Tuesday, largely thanks to a shift in the strength of the pound relative to the euro. And the change came after Mark Carney, Chief of the Bank of England, stated that the bank would be able to deal with any fallout of the EU referendum. Wednesday and Thursday session was very different to the start of the week, and a rally in oil prices really pressured all gas contracts higher. Last night, near-term contracts closed the session higher than last Friday. All contracts tracked their equivalent gas contracts lower on Monday as CCGT provided around 52% to the generation mix. Prompt contracts rose on Tuesday as wind generation reduced, and also EDF's West Burton CCGT plant, its return was delayed. The curve, however, took direction from easing gas prices and a strong rise in the pound against the euro. The prompt was bearish on Wednesday, however this didn't direct the curve contracts, and all longer dated contracts rose. The bull run continued on Thursday's session, driven by an increase in wider fuel complex. Last night, most contracts closed higher than last Friday. You can download the full version of this report from the Energy Price Information tab on our website. Thanks for watching, and we will see you next week.